Okay, video 4. This video will have a lot of sort of key stats and statistics and ways to interpret graphs and things like that. So first of all, this is a graph that looks at the increase in GDP per hour worked. And what it asks you is, it asks you to calculate the percentage change in the GDP per hour over the 2-year period. Now this question, don't overcomplicate a question like this. Basically what you're doing is looking at the figure at the end and the figure at the start and working how much it's increased by. If you get this quicker, don't just write the answer, show you're working out. So you would do 102.2 minus 100 divided by 100 times by 100, and you would get your figure, which would be 2.2%. So 102.2, and you'd expect it to do the answer because the math should be relatively simple. Minus 100 divided by 100. Let's finish this off. Divided by 100, then you times it by 100 and show your answer to be 2.2%, and you'll get your full marks. In a question like this where it asks you to draw a macro curve, we don't draw a lot of macro curves, but just be mindful if you do get a question like this, that you label the x-axis and the y-axis. So the price is on the y-axis, it's also called the general price level, and the real GDP on the x-axis if it increases to the right and if it decreases to the left. So just label those 2 points, real GDP 2 and price 1 or price 2, depending on what's happening when you get those questions. And again, another few more graph questions. When you're reading these figures, key things to recognise, and we did discuss this in class, these figures compare inflation to a base year. So here, inflation is 3% higher than our base year, here it's 5% higher, and here it's 4% higher. If those figures are going down, so in 2017, the lower number signifies we've experienced deflation because prices are lower than what they were in the year before. In 2016, we experienced inflation because prices increased by 2 points in terms of the index. That's not 2%, but they have increased. And in year 1, they increased by around 3%. So the country experienced deflation in 2017. That's true because prices went down. The country experienced deflation in both 16 and 17. That's not true because in 2016, you can see the number is higher in 16 than it was in 15, so prices are going up. Over the 4-year period, the general price level rose. Well, it was higher at the end than the start, so that's true. And the inflation rate in 2015 was higher than what it was in 2016. So to do that, you have to work out the change for the year. So in 2015, inflation increased by around 3%. In 2016, just because this figure's bigger doesn't mean inflation was higher. It means prices are now higher, but the inflation rate hasn't been as high in that year because it's only increased by 105 minus 103 divided by 103, which will give you just under 2%. So prices have gone up, but the inflation rate was higher in 15 than it was in 16, which makes that last statement true, which means the only incorrect statement is B. Which one of the following is unlikely to cause an increase in Australia's terms of trade? So as we know, the terms of trade is a ratio of average export prices to import prices. If we go through the answers, an appreciation of the exchange rate may cause a higher terms of trade because import prices go down, so that could work. A decrease in the world supply of coal. When there's a lack of supply, things generally go up, so the price of coal is likely to go up. Coal is a major export for Australia, which is likely to mean that higher coal prices would cause a higher terms of trade. The third one, an increase in the use of solar energy. Well, solar energy, unfortunately, is a substitute for coal, so if more countries are using solar energy, it's likely to reduce the demand for Australian coal, which will lower the price of Australian coal, which will lower the price of our exports, which would lower the price of the terms of trade, which makes that the correct answer. And an increase in real incomes for Australia's major trading partners would increase demand for coal and iron ore and our main exports, which would cause a higher terms of trade. So the correct answer is C. The government recently increased the excise on tobacco by 12.5% for the next 4 years. Which impact will it have? Well, we know that excise taxes shift supply. So supply will go here, supply 2, and it will cause an increase in the equilibrium price, so we can get rid of the first 2. And so we're looking for an expansion in supply or contraction in demand. Technically, when we raise the price, both an expansion in supply and contraction in demand occur. So when you're deciding between these two answers, the correct answer is D, because basically we use the contraction of whatever curve we didn't shift. So when supply shifts to the left, that will cause a higher price and a contraction along the demand curve. If we had a question that asked you which will cause a contraction in supply, it's going to be the thing that causes a lower price, which would be a shift in the demand curve to the left. So the correct answer to this question is D. Just some terminology. The VCAR very rarely use this terminology, but just to make sure and just in case, if a question asks you about a change in the quantity demanded or quantity supplied, that means a shift. So an increase in the quantity demanded means a shift in demand to the right, A decrease in the quantity demanded means a shift in demand to the left. An increase in the quantity supplied means supply shifting right, and a decrease in quantity supplied means supply shifting left. If it just says an increase in demand or an increase in supply, that means an expansion or a contraction. So if the word quantity is not there, that's the defining thing. If it just says an increase in demand, it means an expansion in demand, so caused by a lower price. A decrease in demand is another word for a contraction in demand. An increase in supply means an expansion in supply, and a decrease in supply means a contraction in supply. Question from a past SAC. Amazon continues to expand into foreign markets. Explain how Amazon's investment in Australia is likely to be recorded in the balance of payments and how it might impact on the dollar in both the short and the long term. In terms of the balance of payments, all transactions involving buying a company or purchasing shares in a company is recorded in the financial account. So as Amazon is a foreign company, its investment into Australia will be recorded in the capital and financial account under direct private investment. It's more than 10%, so it's direct private investment, and it's a credit because it's money coming in. It is direct investment because it involves the creation of new assets, including the setup of a production facility more than 10% or more than 10% of the shares in a company. In terms of the impact on the dollar, because it's investment into Australia, it's recorded as a credit entering the current financial account, money's coming in, so it's a form of capital inflow that will appreciate the dollar. In the long term, as the profits flow overseas, that will cause a consistent amount of outflow out of the current account, and that would cause the Australian dollar to depreciate. Distinguishing nominal from real wages, another question from a CPAP exam. Nominal wages can be hard to define, but the key thing to say is it's just the actual payment of income for your contribution to the production process. So the nominal wage is just your actual wage for providing that service, and it's recorded in flow 2 of the circular flow model. Real wages is different to nominal wages because it's adjusted for the effects of inflation, so it better reflects consumers' purchasing power. And then use an example. So during times of inflation, if nominal wages remain unchanged, it is necessarily the case that real wages will fall, which means that for any given wage, we'll have less purchasing power over time. So to provide a clear example, you could say if inflation increased by 1% and wages went up by 0.5%, then real wages would fall. Okay, so a couple of other things. If you get questions where you ask for policies increasing growth or increasing demand over the last few years, make sure you talk about stuff that's already been initiated. So a couple of things, the $75 billion on infrastructure projects, the ongoing commitment there is in helping to create jobs. The depreciation allowances, that's a really good policy because you can link it to inflation, you can link it to any budget that's occurred, you can link it to employment. There's heaps you can talk about there. The tax cuts, last year they increased the 32.5% tax bracket to $87,000, and then in July this year they increased it to $90,000. Both of those are relevant in terms of boosting incomes and disposable income. And the company tax cuts that actually have been passed are for those businesses earning less than $10 million, so that's relevant to growth as well. If you get a question that asks you to name a cyclical factor that may cause a larger current account deficit, okay, it's important that you choose factors that are likely to occur during a peak that may lead to a bigger current account deficit. So don't talk about things like weaker overseas growth and things like that, or even the dollar. Stick away from that because they're not necessarily specifically related to a peak. So if you get a question on name a cyclical factor that could cause a higher CAD, things you could talk about are things like stronger consumer confidence during a peak, or higher real disposable incomes during a peak. So what that does is both of those things lead to increased spending on imports. So one example here is an increase in gross national expenditure or aggregate demand over any given time period is likely to cause an increase in the CAD. This is because the rise in national spending will naturally spill over to additional import spending, so consumer imports as well as intermediate and capital imports, which reduces the value of net exports. It has a negative impact on BOMT and BOGs within the current account, increasing debits relative to credits. So choose factors that are specific to a peak in the business cycle that lead to more import spending. All right, Donald Trump. Donald Trump was in the news a lot during when your exam was being written, and I'm trying to anticipate questions you might receive on the Trump administration. One thing they may do is just make this the microeconomic question. So, for example, if Trump was to put a tariff on our products, explain how it might impact demand and supply, international competitiveness, relative prices, or something like that. And the key thing here is that tariffs are taxes placed on our exports. The money goes to the federal government of the USA, and it's the US citizens that have to pay the tax. So whenever we put a tax or a tariff on our imports, or our exports, it will shift the demand curve to the left, because when we sell them for a certain price, they'll now be at a lower demand because they cost the Americans more. So make sure you make it clear that it will increase the relative price of our exports for them, but for us it will cause a shift in the demand curve to the left. In terms of Trump's administration, the idea is that they're not actually putting increased tariffs on Australian products yet. It's mainly related to Chinese exports. So if you do get a question about how Trump's tariffs may impact Australia, it's more through the impact on China. They could lead to slower growth in China because they export less. That can lead to less revenue for us because they're less likely to experience demand for our commodities. Particularly, there might be a slowdown in infrastructure spending. The slowdown in incomes might affect tourism and education as well. The other key thing you could link it to is that if Trump did this, it could cause the Chinese currency to depreciate. And the issue with that is that then they'd have less purchasing power and buy less Australian goods and services. So you could make a link to the decrease in the currency of China and how that relates to hurting the Australian economy as well, if they're exporting less. It's also caused the share market to fall, which can have a negative impact on Australians' wealth and consumer confidence. So there's some relevant things. You might want to pause this slide and have a look about it in relation to what Trump could do to the economy, mainly linking it to the impact to China and the flow-on effects for Australia, including the impact of the Chinese currency falling, which would then appreciate the Australian dollar. Right, last thing for this video, the problems with high inflation. Look, this has been in a few practice exams and it's not something that people are doing very well. And the reason for that is there's a lack of detail in people's responses. So you need to go back and make sure you really understand the key benefits of keeping inflation down or the key costs of high inflation. So the first one here is that high inflation can reduce the purchasing power of people. Okay, that's pretty straightforward, but you've got to provide more detail where it gets a bit trickier. So make it clear that it can reduce real incomes because nominal incomes may not grow as fast as inflation, which reduces people's access to goods and services. In terms of being really specific, it generally hurts those in low-paid workers, unskilled jobs, or those that lack the bargaining power to increase their money wage in order to protect their real incomes. So it hurts low-income earners, it hurts those on fixed incomes, like welfare recipients. They generally experience a bigger decline in material living standards. So if you want to get 2 marks on these questions, it's not enough to just say it reduces purchasing power. You need to make links to fixed income earners, to wages not increasing as fast as inflation, which hurts real wages. You could also talk about bracket creep here, and that leads to lower real disposable incomes because we get pushed into higher tax brackets. As a secondary thing, inflation, again, it impacts our international competitiveness. This is one thing, again, that's relatively straightforward, but linking it in more detail is the tricky bit. So it reduces the international competitiveness of Australia's tradable sector. That will make it harder for our exporters and import competing businesses to compete with imports in the global economy. This occurs because inflation is likely to result in higher export prices, which encourage foreign consumers to switch away from non-Australian suppliers. And this, likewise, the higher prices being charged by import competing businesses will decrease the demand and encourage us to buy imports instead. This will reduce net exports and slow down economic growth and aggregate demand. Other problems, it undermines efficiency in resource allocation. What I mean by that is that it can distort the price mechanism. So owners find it difficult if they own land, labour and capital to know where they to shift their resources. So inflation can increase the price of some speculative assets like shares and property and artworks, and often reduces investment in more productive areas like investing in your own business. So the idea is that one, it distorts the price mechanism because producers don't know whether their products are in more demand or prices are just increasing because of general price increases. And secondly, it shifts resources away from productive investment like building and expansion of their business and towards more speculative investments like gold and artwork that generally increase at a faster rate than inflation. So less resources go to business investment and more into speculative or risky investment, which undermines resource allocation and slows economic growth because we don't invest in productive areas. The other thing it can do is it can encourage people to spend rather than save, which reduces the amount of money available for investment. People prefer to spend now potentially because they're worried about prices going up in the future. And last one, so here's an example. Explain how inflation can reduce the efficiency with which prices reallocate resources. Price changes often communicate to suppliers and demanders of what to produce. An increase in the price of a good or service generally tells them where to shift their resources. In the presence of inflation, prices are affected not only by changes in supply and demand, but also by changes in the general price level. Inflation creates static or noise, which makes it harder for the price system to determine where to produce goods and services and efficiency.